Welcome to All About Money on HK IBC. I'm Chloe Pham. 2 years after mega developer Evergrande's bond default, China's property crisis has worsened. More major developers, including Country Garden, are on the verge of defaulting as home sales decline amid weak sentiment. In what appears to be a ticking time bomb, some have gained breathing space by restructuring or delaying bond repayments. But the question remains, will they ultimately be able to recover and repay their debts? Meanwhile, as Beijing rolled out measures to stabilize the sector, but property investments continued falling. So where are we now? Joining us tonight to analyze China's credit crisis is Mr. Daniel Fan, team leader of Asia Credit Research at Bloomberg Intelligence. So welcome, Daniel. Thank you for taking the interview with us.
Thank you, Chloe, for having me.
Firstly, let's talk about the latest developments among the major developers. Now we have another one. From Sunac China Holdings, it became one of the latest developers under liquidity crunch. And it has also applied for U.S. bankruptcy protection under Chapter 15. Shares in Sunac China Holdings earlier surged as much as 14% on Tuesday after creditors approved its $9 billion offshore debt restructuring plan. But then the stocks also gave up all of its gains to close down 4.3% after the reports because there's a court document showing Sunac had filed for the bankruptcy protection in the U.S. So, I mean, what do you make of the latest development? How would this issue also weigh on the overall crisis that we've seen in China?
I think if you look at the Sunac case on a standalone basis, they filed Chapter 15. It's similar to what Evergrande did, I think, last month. There are actually two ways to look at it. One way is a procedural thing because some of its loans are under New York laws. So naturally, it needs to file for bankruptcy protection just to go through the procedure. As you know, bondholders basically support the restructuring plan, but that filing, given what has happened to Evergrande after they filed, there's some issue on the restructuring plan and they need to propose on the vote. So that creates some kind of confusion and uncertainty.
Right.
If you look at the other way, it's okay, if you file for Chapter 15 protection in the US, meaning that creditors cannot go after you in a US court. So that's another way to look at it.
Right, but after all, this issue could still add another layer for the overall sentiment crisis in China as well, because now we're really having this kind of confidence crisis, isn't it? And also, speaking of Country Garden, it now has some positive progress, we can say that way, because it has won approval from creditors to extend repayment on another onshore bond, marking the last of its 8 bonds it has been seeking extension for, according to sources. And so far, it actually has managed to extend its repayments on 9 bonds in total. I mean, do you think after this extension, how likely will Country Garden be able to meet its financial obligations after gaining extra space?
I think for onshore, it looks like they are okay. As you said, they extended all of their onshore bonds, which are 9 of them. They also did something on the ringgit bonds and also on their Thai bonds on local currency. So it's more about the hurdle, the next hurdle coming is more about, first of all, is the coupon payment that was actually due on Monday. It's likely that they would need to use the grace period, that's 30 days to fix it. So this is not the first time they try to use the grace period, it's the second time. Last time they fixed it. So this time, hopefully, I think, based on what they have done, it seems they're still trying to avoid a default. The pressure point will come, I think the key one is towards the end of the year, and also in the first quarter of next year, when 2 of their convertible bonds and $1 bonds are coming due, the amount is quite large. I think it's $1.9 billion. So that could be a major test for the next round.
So it gains some, for example, breathing room for now. But do you think ultimately Country Garden can potentially recover from this debt crisis? And also maybe could you also help understand about the crisis difference between the case in Country Garden and the case in Evergrande? How different are they?
I think first of all, for Country Garden, it may need to do an extension if they're not really able to find refinancing alternative by the end of the year. We haven't seen any kind of sign they are able to do it. They're doing some asset disposals, but the amount shouldn't be big enough to plug the gap. Regarding the difference between Evergrande and Country Garden situation, I think they are quite different in a sense that Evergrande, I think, as you are aware, that they used to be more aggressive, use debt-funded expansion. So I think when you look at this company, you are kind of knowing what kind of risk you're taking. And then for Evergrande, it's quite different in a sense that just more than a year ago, slightly more than a year ago, they were still an investment-grade company. So meaning that their financials were okay. And then they were regarded as a good student onshore, following the government's policies. So from that perspective, I would say Evergrande's situation is more about their leverage and debt. And then Country Garden is more about confidence.
It's because also the home prices have been falling, so that people are now worried about if they invest in such property products, then they're probably not going to see any returns, right? 2 years ago, we probably think that the Evergrande will be a very singular case, but now we're seeing more developers potentially facing default. Then also, where are we now amid this ongoing crisis?
About where are we now, I think there are two ways to look at it. So one way, we think this is just a cyclical down cycle, which is easier to deal with. So just like every 10 years, we have like a down cycle, like 08, 97, 2018. That is easier to deal with because eventually the whole thing could recover on its own after demand supply readjusts. So some people kind of viewing it differently. Maybe this one is a kind of structural, in a sense that it's structural, meaning that maybe policy-wise, the government kind of maybe they in the past, I think economic growth is on the top, really top of the agenda. Now maybe they have other agendas to deal with. That's on one side, and other kind of difference is the relationship between China and the West. That could create some kind of slowdown in terms of the economic growth in a bigger picture. So those could be structural. So if we in a best case scenario, we think this is just a cyclical situation instead of a structural change. Now we are talking about assumptions. If we think it's cyclical, probably we are now at the bottom, and then it may take a year to consolidate and then start the growth again. But then whether we are hitting a structural change, that is something we need to monitor. If a structural change, a lot of people compare it with what happened in Japan in the late 80s and early 90s. So yeah.
And what kind of data will you be closely watching for to signal that, okay, maybe things are getting better? Would be more on the property investment and home prices?
I think the more direct way to look at it is home sales because it generates cash flow for the developers. So after the policy easing at the end of August, it seems we haven't seen major rebound in home sales. Actually, in the first 2 weeks, the data we have are actually slower. So that's why we have this another round of policy coming out.
Speaking of the major developers, I know that maybe not all of the developers will survive. But even Evergrande, after its efforts being made to restructure its debts, now it actually resumed trading. So even Evergrande can potentially recover. Then would Country Garden be also even at a better position given its significance in China?
If you remember the three arrows, the third one is more about help Country Garden to raise onshore bond by pledging collaterals. I think if I remember correctly, the quota at that time is 150 billion RMB. So only a fraction of that amount is used because a lot of developers, they are doing property developments instead of like investment properties. And I don't think they have a lot of collaterals they are able to post to the authority to get their guarantee for onshore bond issuance. So it seems that the third arrow hasn't been used in a very effective way.
But some people are worrying that Country Garden is also too big to rescue as well. Do you think Beijing has the capability to rescue it?
I'm not too sure about on the Beijing side, but if you think about it, Country Garden is a national developer, so a lot of these policies are kind of at the local level. So meaning that the local government need to deal with it. So if I am it's like Guangzhou government, do I really have the ability or willingness to help a national developer? It's like getting around with many projects. So I think it would not be that easy.
All right, hold that thought, Daniel. We'll take a short break for now, but coming up next, we'll continue our discussions more on the China's property policy, so stay with us. Welcome back to All About Money on HK IBC. I'm Chloe Zhen. Joining us tonight is Mr. Daniel Fan, team leader of Asia Credit Research at Bloomberg Intelligence. So, Daniel, it's great to have you today. And today we're going to discuss China's real estate credit crisis as well as China's ongoing policy adjustments. And now we have seen some measures being rolled out, but more on the piecemeal, those kind of way instead of a package or more stronger package. What do you make of authorities' approach so far?
I think based on what we have seen in the latest round, it's more about the policy measures are reacting to the market situation. Instead of in the past, we get a really big package to ensure nothing goes wrong. So in this round, I think, just like the policies launched in August, and we see sales are not really recovering. We are seeing another round of policies measure. So basically, it's more about reaction to the market situation. If sales recover, I think policy measures may stop for a while. So it is kind of as you say, kind of piecemeal situation for the time being.
How long does it take probably for those policies to be able to show its effectiveness in the property sector and also in the credit crisis as well?
I think it's difficult to gauge that way. I think first of all, the policies are coming out bit by bit. I think the key is more about whether it's able to regain confidence of home buyer and also of the market.
Now, this week, we also have some other updates because for now, Guangzhou, it has further relaxed its home purchases rules in some of its districts after already having eased its mortgage policy less than a month ago. And now families with household registration in Guangzhou's, for example, Haizhu, Tianhe districts can purchase up to 2 residential properties, according to a notice issued by the city on Wednesday. Meanwhile, residents without household registration can also buy 1 residential property after having paid Social Security for 2 consecutive years. So it actually is the first major city, Tier 1 city having such relaxations, do you think other major tier 1 cities will also follow suit to, enhance its efforts to boost this market?
Yeah, I think so. I think other major cities like Shanghai, Beijing are likely to follow suit to kind of like reinitiate or revitalize the sales situation in the tier 1 cities. I think it's probably not core like inner ring road kind of like cities. It's more like in the slightly outskirts, the city you mentioned. I mean the area you mentioned. So I think in the really core area, we were actually in Shanghai last week to look at some projects. The core area is still fine. If you launch a project, it will be sold without doing much marketing. So now the next step is helping those slightly outskirts, and I think they are going to do it step by step. So yeah, it's more likely that other cities are likely to follow suit.
But at what point do you think we could possibly see another round of policy package to spur the market growth? Because now, if we look at some other developers, we still have, for example, Soho China. It is planning to adjust its debt restructuring as well. And also we have Sino-Ocean that has halted payments on some of its debts. So we potentially could see another wave of a liquidity crunch, isn't it? So before that, do you think authorities will try to step in before we see another wave of liquidity crunch?
I think that for Soho and Sino-Ocean, it's already happened. So I think the next step is like look at their debt restructuring plan or extension plan. So I think the government is more looking at to fix the fundamentals instead of helping on individual developers that situation. I think at each individual developer's that situation, I think they need to deal on their own. If we look at the 3 arrows, the most important is delivery, which is kind of like good in the sense that you are able to secure kind of gain the confidence of home buyer. But at the same time, the downside is developers may not have spare money to service its debt. So that is the downside. So I think what the government has been doing is, first of all, is more about delivery. And then the second one, I don't think is really helping. I think as we said, the third arrow is more about helping on the issuance side to help them to tap the market, but that hasn't been too successful so far.
Do you think there's a need for authorities, for example, to loosen the 3 red lines policy?
So practically, the 3 red lines, if you loosen it, it doesn't really matter anymore because the market for financing is less available now. Even though you allow people to borrow, it's more about who is going to lend to them, who's going to invest in these developers. And
also, speaking of the outlook, we still have the declining population. We still have a fundamental change in the supply and demand because now we have an oversupply issue. Then how could we also address this issue with the declining population?
Yeah, I think the supply situation is kind of like demand driven because of the pre-sale system. You actually pre-sale your project before delivery, meaning that you are calling your clients and then about like, would you like to buy a piece of property? And that's from the demand side. So that will be automatically kind of adjust. I think the issue is more about the land bank they bought at the peak of the market, sitting on their balance sheet, waiting to be launched. And probably they may not have capital to launch those projects. And those projects probably are debt funded. So that part I think is more an issue. So demand supply I would say is kind of self-adjusting.
Over time, right?
Yeah, over time.
Do you think authorities should also issue more stimulus measures for those unfinished projects?
For the unfinished projects, when I talk to, at least in the tier 1 cities, there aren't that many. Probably in the lower tier cities, there are more unfinished projects. Because I think the top priority is still, for the government, still to ensure deliveries.
All right. And also speaking of the overall, the country's development, now if the wave of credit crunch persists, then the banking system could also be affected because now the lenders are encouraged to lend money for those developers to finish their unfinished projects. But then if such issue continues, then the banks could also see their earnings be reduced because they're offering lower rates, right? So if such issue continues, would there be a Lehman moment in China?
I think because a lot of the big banks, they are state-owned. My colleague actually covers banks. His name is Pretty Silver. So his view is because most of the big banks are state-owned, he doesn't see it as like a systematic risk situation.
How long do you think such a downturn will last in China?
I think as we go back to the assumptions, if we think this is simply a cyclical downturn, it could recover like, in 2025 to 2027. I think the logic is kind of simple. I think you see a peak of sales in mid-2021. So it takes like 3 years for delivery. So meaning that we are able to resolve the delivery in 3 years' time. Obviously, it will take longer in a practical situation. But then I think majority of it will be kind of dealt with in 3 years. But this is based on the assumption that we think this is a cyclical downturn. On the structural side, we don't know yet. I think if sales don't recover in the near term, there could be more measures.
Last but not least, we know that China's property sector is not only very important to this country's economy, but also to the world's economy.
Yeah.
How could such downturn also affect the global economy in some level?
I think it may affect consumption, but we need to look at it in two aspects as well. So first of all, I think if you are kind of like wealthy people, I don't think you still go out to shop and whatever. I think the damage is more to the kind of middle class people who bought their property at the peak. That will affect their consumption, or they probably won't go out for shopping. But given the different kind of interest rate cycle in the West and China, I don't expect the damage will be that substantial.
More on the domestic side?
Yeah, more on the domestic side.
So we now really need to see if China's economy could recover in the near term, and then that could probably help ease the pressure on this sector in many ways.
Yeah, I think that would be the key,
All right, thank you very much for your thoughts, Daniel. That's Mr. Daniel Fan, the team leader of Asia Credit Research at Bloomberg Intelligence, and thank you for watching All About Money. We'll be back next Sunday night, so until the next time, see you then.